Let's keep talking some stocks. In particular, a big fine from European regulators on Meta and Facebook. Caroline Woods is the story for us, our senior markets correspondent at the New York Stock Exchange. We're in the billions now talking fines, Caroline, not a small amount.
Hey there, good morning, Oliver. Yes, and it looked like Meta shares were actually going to open lower, and taking a look, they're actually modestly higher despite this hefty fine from EU regulators over the transfer of EU data to the U.S. European privacy regulators have fined the social media giant a record $1.3 billion. They found Meta illegally stored data about European users on its servers in the U.S. They also ordered it to stop sending information about European Facebook users to the U.S. and delete any data that's already been sent. This is tied back to a case which argued that the framework for transferring EU citizen data to America did not protect Europeans from U.S. surveillance. Meta says it's appealing these decisions, including what it calls the unjustified and unnecessary fine, and will immediately seek a stay with the courts. In a statement, Meta said, without the ability to transfer data across borders, the internet risks being carved up into national and regional silos, restricting the global economy and leaving citizens in different countries unable to access many of the shared services we have come to rely on. So Meta says there's no immediate disruption to its European operations, but this will likely heighten the stakes for agreeing on a deal between the U.S. and EU over data transfers. So we'll see how this plays out. So Meta says it's appealing and seeking a stay. Let's see. Doesn't seem to be having an impact on shares today, though. They're up about 0.5% in the early going.
Yeah, pretty amazing stuff. Shrugging it right off and continuing the grind higher. So, all right, amazing stuff. Resilient market and leaders doing just that, continuing to lead with the price action. Meta going positive here while the Nasdaq's down on the morning. And on the flip side, a little bit of softness in Apple, not a ton, but right now lower by about 80 bips and kind of a rare cut to expectations from one analyst in the stock.
Yes, Apple's already up more than 30% so far this year, and an analyst over at Loop Capital is turning cautious, downgrading Apple to hold from buy. Did keep its price target unchanged, though, at about $180. So Apple is currently trading just below 174. So that implies low single-digit percentage upside. The reasons for caution, Loop says we've now seen Apple reduce its builds, and we believe shipment forecasts for essentially the second time in the last 4 weeks, pointing to Apple reducing its June quarter iPhone shipments estimate by an incremental 5 million to 35 million units. So the analyst now sees material downside risk to Apple's June quarter revenue relative to both guidance and Wall Street estimates, saying while we believe Apple's September quarter and December quarter shipment outlooks remain intact, we also believe the risk has increased. It could eventually be lowered. So as for how this analyst call stacks up against the rest of Wall Street, he's very much in the minority. 80% of analysts, despite the fact that Apple is up, as I said, more than 30% this year, 80% still have a buy rating, 17% have a hold rating, including this Loop Capital analyst, and 3% have a sell rating. That being said, that $180 price target is actually in line with analyst expectations. The median price target is $180. So not a lot of upside. As I said, that implies, I think, about 3% upside from current levels. So there are targets as high as 209, but we'll have to see if analysts kind of revise to the upside or keep things in line and start changing their ratings. Okay.
All right. Well, market's powering through it right now. Apple only down 0.5%, but material downside is something that we definitely need to take seriously, it seems like, because they will certainly be a contrarian in that call right now. Though we have seen a few bearish outlooks kind of creep into the analyst community on Apple for the most part. Whenever you come out and say serious downside risk, you're certainly going against the grain of the recent price action too. 176 last week. We got above that August high last year. So we're at a year-long high for Apple. Thanks, Caroline. Good context for us to think about here. Appreciate it.